jumping right into wages. Wages are usually the primary component of most claims. They're the largest and the most scrutinized. So I've given you a little flow chart in the course handouts that reference each section of the Act, but these are basically the questions or the decisions that you want to go through on claiming it. The first is, do we get a T4 slip? Okay? I don't mean a T4A slip or a T4AP or anything like that. The government, the way they review wages is really easy. They get your T4 summary because you have to take taxes off and remit it for each person. So for each employee, they know exactly how much that person made on a calendar year because you had to report that to them on a T4 slip. So this is a very easy thing for them to review. You know, what are your wages? Who are the employees? How much did you pay them? Does it jive with how much you've said you've paid them on the T4 slip? And if it does, it's no problem. If it doesn't, guaranteed you're going to have a problem. So this is easy. They're going to catch any mess ups of someone not being an employee. They'll catch that immediately. Okay? Question number one, can I see the T4 slip or get the T4 total and stuff like that? And we'll show you how to work with that. Okay. Secondly, can you allocate it to SR&ED activities? We'll talk about that in the next couple slides. So basically, it's any designer testing and computer programming that were necessary to answer the pre-stated technology problems. This is a huge question, vacation or holiday pay. And I'll illustrate it really quick. We got some slides to do it, but it's a pretty simple concept. If you think you pay someone $30 an hour, because their contract says $30 an hour, I'm going to argue that for tax purposes and for R&D tax credit purposes, you probably pay that person $33 an hour. Okay? And that's because the definition of salary and wages in the Act is in 248 sub 1, and it says it includes everything in sections 5 to 8 of the Act. So okay. And you realize sections 5 to 8 include stock options, they include holiday pay, they include, because they're trying to tax, they include everything that you get. They want to tax you on that, so they're trying to include it. So that's the definition of salary and wages. It includes holiday pay. So I'm saying if you think you pay someone $30 an hour, it actually costs you more than that. Because let's assume that they get 3 weeks of statutory vacation a year and 10 statutory holidays, for argument's sake. So 5 weeks out of a 52-week year, I'm going to pay that person their regular salary, and they're not going to come into work. Why would I do that? Well, of course, say it's easy, because the value I get from them the other 47 weeks, right? So when I'm paying you 30, I'm actually paying you 33, because I'm going to have to pay you 5 weeks for doing absolutely nothing, which is part of the cost for the 47 weeks that you're there. Okay? So if you miss this, you just lost 10% of your claim usually, and you lost more than that because you lost a proxy on that as well, right? So often I'll go into claims that they say, hey, review it, see if we missed anything. That's an easy cash grab. I can add 16% to a claim, right there just by that one thing, and I'll pretty much always win that, right? Okay? So just a heads up. What's the definition of salary wages in the Act? And it's outlined, and make sure you optimize that. Because if you don't, CRA is not going to tell you. They're not going to fix this for you. They'll let you continue on. Yes, sorry.
If you're hiring a consultant,
yes?
they're technically...
They're not a T4 slip then.
Yeah.
We'll talk about that in section I, which is subcontractors.
Okay.
Exactly. Then you got a whole different set of issues. Okay? The other issue is, does any of the employees own 10% or more of any class of stock of the corporation? Or are they related to such a person by blood, marriage, or adoption? Okay? Related is 251 of the Act. So, everyone except basically your in-laws. Your nieces and nephews don't get caught, but your blood relatives, your children, your grandchildren, those would all be caught. They're all related. So even, you gotta be careful, even the president's son who's sweeping on the summer job, who's working in the shop or whatever, may be a specified employee, although he or she, the son in this case, he would have no ownership. If they're related to someone who has ownership, they're still gonna be caught by these rules. Okay? And lastly, for each of the employees, I like to profile a bio or technical background of the most senior employees, because that's what they're going to look at. Who's supervising the work? Who's making the experimental decisions? So a quick labor summary would list all of your cases, what the wages were for specified employees, non-specified employees, and in total, right? So this would be the total for all the projects, and then for each project you would break down, nature of work for each employee and how much you paid them. Very simple stuff. The real trick is deciding what activities are in. Once you've got the hours, it's in. This is a Canada Revenue Agency document I've put in there just to discuss what's the direct R&D, What's covered by the overhead examples? So that's all the administration things like staffing, contract administration, technology training, long-term planning, things like that. So they're related to the SR&ED, but they're more the paperwork, administrative side of things. They're not the actual research. That's what's covered by the proxy amount. So if you've made this proxy election, you don't have to track any of your administrative costs. If you haven't, then you get to get a reasonable portion of those costs in. Again, that's a tricky question. I help some big companies do this because sometimes there's a real advantage to going non-proxy. But the CRA will tell you that to go traditional overhead really raises up the risk factor for them. So the chance of you having a financial review on traditional overhead is extremely high. Okay? And the bigger your number is on traditional overhead, the more likely they are to review it because they see it as a very high risk area. So again, if it's very close, maybe a little bit better going traditional, I'll often tell the client, how much is a day of your time not talking to a CRA reviewer worth? And if it's worth enough, I'm going to go the proxy method. Keep things simple. Okay. Specified employees. I get a lot of questions from other accountants because these rules are very, very tricky, needlessly tricky, I would say. So we have to determine if someone's a specified employee or they're not a specified employee. Okay? And then we got to determine what costs are in, not only for calculating their R&D wages, but also for calculating something called the salary base that we multiply by a certain percentage to create the proxy amount. Okay? And sadly, these aren't always the same number. They're seldom the same number. Okay. So for a specified employee, your salary and wages are in, as well as non-specified employee. Any bonuses or remuneration based on profits for a specified employer is out. So if I bonus myself at the end of the year to get my income down to $500,000, I pay myself $300,000, I don't get any credits on any of that, right? If I would have paid myself the $300,000 as salary, then I could get credits on the whole thing, but not as a bonus. So it's really important that you plan this kind of a year ahead instead of the year after, as most accountants usually do, right? You've got to predict what your income is going to be and maybe set your salary to optimize that, okay? Any expenses paid beyond 180 days, you actually claim them in the year that they're incurred, but you don't get your credits for them until the year you actually pay it. So we'll talk about that a little later. And most importantly here, there's an absolute maximum on what you can claim for a specified employee. So this is how the government caps it. It's yearly maximum pensionable earnings, which is set by Canada Pension Plan. It's a number that goes up every single year. It's indexed. And we'll talk about what that is. But it's roughly $260,000 now. So the first $260,000 that I pay to a specified employee, usually an owner-manager for R&D, I can get credits on. If he or she pays himself more than $260,000 in R&D wages, I still get to deduct those wages, but I no longer earn any credits on them. Okay? So if they pay themselves $3 million, it's only the first $260,000 I get credits on. Any remainder is a deduction, but it doesn't earn credits. If I pay a non-specified employee, I get some software wizard, doesn't own any shares, I pay him or her $3 million, and they're doing R&D, I claim the whole $3 million. Okay? So again, this is how the government limited that, they know the owners are going to bonus stuff out or pay it out, and they may be smart, like we say, and pay it a salary instead of a bonus, but they're still going to cap you anyway. So they're not really worried about any abuse there, right? In order to get the credits, you have to pay the withholding tax, which is usually around 46 to 49%. And as we said, in most cases, most of the credits go to large companies who only get 15% back. So it's what they call a hedge transaction. They're collecting 50 cents on the dollar and they're kicking you back maybe 25 cents, including the provinces. They're still ahead of the game. Okay? You can never bankrupt the system. Again, Quebec only pays you on wages, which is very clever. It's with a hedge system. If I pay you on materials or capital or things that don't necessarily create any revenue, I could bankrupt the system. I can buy foreign materials or whatever. So that's a lot riskier from a finance point of view. All right? So I always like to keep in mind, why would Parliament do this so the rules start to make sense to me and I don't make any mistakes. Okay? So there's two levels. There's a limit of 5 times yearly maximum pensionable earnings for the wages part. There's a whole separate calculation then for the proxy. And it says you start with this calculation of the wages, but then we do some more adjustments. We say any bonuses or remuneration based on profits to either specified or non-specified employees are out for the proxy amount. Again, why are they doing this? Making it so complicated? The answer is they initially made the proxy 65% and then decided it was too high, but the politicians didn't want to say they were reducing it because that was unfavorable, so they created all these other little rules that kind of reduce it without reducing the base number. Okay? So we have to learn all of this to figure it out, right? Again, expenses paid beyond 180 days. And the other thing is, there's a different limit for calculating the salary base that we then multiply by 55 to 65%, depending on what year we are, to get the proxy amount. And it's 2.5 times YMP on that one. A lot of accountants get confused with this. I've seen accountants who think that this limit applies here and all kinds of mess ups, right? So there's a lot of confusion about it, which is again why I created this chart, just so I can keep it straight, because without a little table like this, it is very confusing to read through the CRA documents and think, what are they doing here and why are they doing this?
Question on, if you're a company, small company, startup, and as an owner that you're putting in your time but expensing, you're not getting paid. How
Right.
does that get captured?
Let me go to section R.
Is that I again?
No, I'm going to go to section R on that one,
Okay.
which is using the rules to prevent abuse in your favor. I'm going to show you how to turn the 180-day rule. It's called 78 sub 4 of the Income Tax Act. And basically, I'll allude to it now, is that this happens a lot. Maybe I'm in a startup company. I left my job in General Motors for $200,000 a year as a crack engineer, and now I'm doing my own thing because I don't want to work for the man anymore. And if you do tax returns for those guys, you're like, wow, how do you live on like $8,000 a year? Because they only take what they need to live, and all their savings are in their company. They don't buy new, they don't even eat half the time. So you say, well, the $8,000 you paid yourself, we could definitely get R&D on all that. But the reality is, your limit is $268,000. Why don't we say we paid you $8 and we owe you $260,000 more? We owe it to you.
Loaned into the company.
There's a line right on the T661. Wages incurred in the year but not paid within 180 days of year end. So the CRA gets the right to come in and make sure you actually did $268,000 of work, what you did, all your records, when you file on the return. But they're not going to give you any money till you show that you paid that within 180 days of some year end. And as soon as you show the remittance, here I paid that guy the money that I owed him, you're going to get your credits. You do lose the proxy amount on that, so it's not a perfect scenario. But again, your accountants could decide maybe you're going to go proxy traditional. It gets a little more complicated. Yes, Peter?
David, deferring the wage increase the risk of financial review?
Pardon me?
Does deferring the wage or unpaid wages increase the risk of a financial review?
I'm not sure because the CRA says their risk criteria are top secret. Although they will tell you that if you do certain things, they'll tell you straight up. If you go traditional overhead, you just blew our whole risk criteria financial side out, you're probably going to get a visit, right? And the bigger that number is, the more likely you are to get a visit. I haven't found it on this one, right? Because of the line. You put it on, a special line 315, wages incurred in the year but not paid within 180 days. So the form automatically pulls it out of the calculations. But the CRA's got this running total. They know you paid that, and at some point they're going to have to pay you on it. They're just going to ask you for evidence of the payment. I've never run into problems with that. Section R will talk about my strategy of how I actually put a legal contract in for the client to make sure it doesn't get deemed a bonus, especially if it's paid in a lump sum at the end of the year, which it often is. CRA, as soon as they see a lump sum to the owner, they're at bonus. That's the automatic assumption. You have to prove to them legally it wasn't a bonus, right? So how do you do that? Okay, this is just a quick example of the hourly cost calculation here. So what I like to do is take the T4 slip, the box 14, total earnings for a calendar year, and then figure out how many hours did someone actually work. If you have a time system that logs every hour, use that, the hours actually worked. If you don't, let's say someone's salaried or whatever, use the assumptions, an 8-hour day, 5 days a week, or 7-hour day, whatever it is, 52 weeks a year, less their stat holidays, vacation. It's actually 47 weeks a year that they're actually working, 5 weeks that they're gone, as we said. So that's really only 1,880 hours in an average man year. It's not the 2,200 that you'd expect because of those 5 weeks coming out. Okay, that difference makes a huge difference in how you calculate the salaries and wages, right? So this is just a quick example of how we do it. One thing that I'll talk about on what they call RFI procedures, request for information. they ask a lot of things about, show how the employee's time was allocated to the SR&ED. And what I found is most clients have a timesheet system, and it captures the employee name, hours worked, but it misses a lot of this stuff in the red. It'll have a project code, which maybe you say, well, that's an R&D project, but we don't know if it's SR&ED. The kind of additional things that we like to do is figure out what type of work. Was it design, testing, programming, or supervision of the R&D? In which case it's in. And there's a whole list of things that are in, but I'm saying if you look at that list of 8, they really boil down to design or test, computer program, or the first line of direct supervision. If you're not one of those things, keep it simple. It's not R&D. If it is, it probably is, as long as we can tie it to an uncertainty. Okay? So this is optional, but this is really good. If we can say this work linked to one of the pre-stated variables of uncertainty, we're not going to have any problems, right? Comments, and then really location. A lot of clients travel a lot, and their timesheet doesn't tell me where they are. And then the reviewers come in and say, well, we want to know all the time you're outside of Canada. We want to know which provinces you were in if you're traveling, because you don't get the provincial credits for the time that you're out of it can get really dicey. So again, very often this information just isn't there. The company doesn't capture it till I come after year end, and then they're saying, are you serious? You want us to rebuild? That's a lot of work for them. So again, give them a heads up. Try to start keeping all this right now. Like today, put a system in so that next year you don't run into those problems. I found if you put a system in and there was problems before, but you show the CRA that the problem's gone, they'll often be more amenable to giving you the benefit of the doubt on the other stuff.
Just a quick question.
Yes.
So like a lot of owners work 80 hours a week, right?
Yep.
And so say 40 hours devoted to doing research, 40 hours running the company.
Yes.
Now, like, can you allocate, like, say they want to take $100,000 salary in the year. Does that automatically get split, or can it be allocated to just SR&D? Someone get paid for their SR&D work and they're working for free for the
It depends who you talk to. That's a classic question that I've faced dozens of times. My position is it depends what your contract says. Okay? If you're a salaried employee, which means you get paid for 40 hours a week, like when I used to work for a big KPMG. I worked more than 40 hours a lot of weeks, but I got paid for 40 hours, right? And everyone did. That was if you didn't, you weren't going to last there, right? They expected it, let's say, in busy season. So I'm after hours and I'm not getting paid, right? Now, there's a decision called the Duke of Westminster decision in British common law from the 1800s that says you have the right as a taxpayer to arrange your affairs to pay the minimum of tax the law allows, or claim any credits, let's say. So I would say, based on that decision and my rights as a taxpayer, if I'm only getting paid for 40 hours a week, I can choose what I do during that, right? So I could say 9 to 5 is my pay. I'm doing R&D, and I'm going to do my non-R&D stuff after hours when I'm not getting paid. I think that's your right, and if you go to court, you're going to win. CRA doesn't do it that way. They're trained to ask every owner manager, how many hours do you actually, and they know they're going to answer more than that. And then whatever number you give them, I work 3,000 hours a year, they're going to use that number as the denominator, right? So, as opposed to you having 1,500 hours where you think you're getting $50 an hour, at 3,000 hours, it's $25 an hour, right? So that's a gray area. The more you document it and line it up, the better you can do. Good question, though. Okay, so this is, again, a sample timesheet that I would give them and say, like, can you tailor your timesheet to do something like that? All right? So really, the way we calculate the time is we take the T4 box 14, total income, T4 box 40, bonuses, all that, and then we let everything calculate all the way through it, right? So we run those calculations to say, here's your hourly rate for the SR&ED. Here's your percentage of time in the SR&ED. Here's the equivalent amount of full-time people by class. Class A would be scientists or engineers. Class B would technologists, technicians, and so forth. Okay? Now, any employee who's 90% or more of their time, you can claim 100% of the time. It's called an ASA adjustment. So then you want to be able to catch that or recognize that when it comes through and bump that extra amount in. Okay, so reducing taxable income to the $500,000. So let's say I got $750,000 income in my company at the end of the year, and I'm doing millions of dollars of research. I don't want to lose my enhanced credit. So I can use reasonable bonuses or wages. And as I said, it's better if I use wages. If I can ask my client, hey, Bill, you made $500,000 extra this year, and you're bonusing it all out and paying half of that in tax. Maybe next year we should set your salary to $500,000 because you're only 50% R&D anyways. So then 250 of that we're going to get credits on, right? And we'll pay it as salary, not as a bonus. Same personal tax to you. It doesn't make any difference to you, but for the R&D, it's going to make a huge difference, right? So again, look at that. Once you go offside, so once your company's gone over the limits where you've lost it, you can't, even if you carry losses back and stuff like that, you can't ever get back on side. Okay? You used to be able to up until late 1990s. We used to do that. Create a big loss this year, carry it back, and get a whole bunch of credits. And then someone in Ottawa got wise to that and said, nah. There's a new rule called specified future tax consequences, which says once you go offside for SR&ED, nothing you do in the future is ever going to get you back on side for that year.